Assalamualaikum, we are from Group A, so we are going to present about the topic we've chosen for the literature review, which is business cycle in Islamic and conventional economy. Before we go through the detail, I will be explaining about the overview of the topic. So, economic activity is characterized by fluctuations that sometimes last for several years between rises and declines. Business cycle describes how the production of goods and services rises and falls over time. According to Noshin and Dr. Abdul 2019, the understanding of the link between business cycle fluctuations and the behavior of Islamic banks and their conventional peers is important to assess the characteristics and the resilience of the two types of banks. The two types of banks operate under different business models, have different cost structures due to different operational activities, and their ability to withstand shocks also differs due to their inherent characteristics. So there are four phases of business cycle, which are peak, recession, trough, and recovery. Of these four phases, the recession is the one that occurs as a result of contraction, as it is the phase that is highly emphasized by economists. Contraction can be triggered by three types of events: interest rates rapidly rising, financial crisis, and rapid inflation. Since our world have been affected by the pandemic COVID-19, it has given the negative impact which has led to the closure of large number of business entity operations nationwide during the Movement Control Order (MCO) on COVID-19 patients. As a result, the COVID-19 pandemic has had a relatively critical negative impact on the Malaysian economy throughout 2020.
I will talk about financial crisis. The financial crisis have 3 points. The number one, the meaning of financial crisis. In a financial crisis, asset prices see a steep decline in value. Business and consumer are unable to pay their debts, and financial institutions experience liquidity shortage. A financial crisis often associated with a panic or a bank run, during which investors sell off assets or withdraw money from saving accounts. The number two, the example of financial crisis. Credit crisis of 1772, after a period rapidly expanding credit. This crisis started in March or April in London. Alexander Forge, of partner in a large bank, lost a hawk some sorting shares of the East India Company and fled to France to avoid a payment. Panic led to a run on English bank that left more than 20 large banking houses either bankrupt or stopping payment to the depositors and creditors. The number three, the history of financial crisis. The crisis occurred during the Panic of 1907, also known as the Connecticut Crisis. The father of depositor trust at the Connecticut Trust Company, one of the largest trust firms in the United States, in the 1st October that accompanied by with spread the statement of investor confidence, had a domino effect triggered and series of bank runs.
So I will proceed to the next part of presentation, which is discussing the implication of the financial crisis to the business cycles. Okay, the fall in national income will cause the effect on the gross domestic product, unemployment, and government debt. Firstly, it will affect the GDP or gross domestic product. An economic downturn usually leads to lower investment and therefore can damage the long-term productivity capacity of the economy. If the recession is short, the loss output may be quite limited. But if the recession is long-term recession, then may become greater. The present crisis was caused by combination of asset bubble, price bubble, mainly in the real estate sectors, credit bubble that leads to the excessive leverage. Okay, secondly, the financial crisis also caused higher unemployment. It is because the fall in economic output will make some firms go bankrupt, where the workers lose their job. They also will lay off some of the workers try to reduce the cost. Lastly, higher government debt. In a financial crisis, the government receives fall in the taxes. It is because all the product will cost lower output than before, then they will receive lower taxes than before. However, it will automatically increase the government spending on welfare payments such as unemployment benefit, housing benefits, and income support. So, government doesn't have any choices than borrowing money. So that's all from me. Thank you.
Costs and consequences of financial crisis. Asset liability mismatch. Description. Because of the disparity between a bank deposit and long-term asset, Banks are unable to renew short-term debt used to fund long-term mortgage securities investment, risk or consequences. When the investor panic and rush to withdraw their money faster than the bank can reclaim the proceeds of its outstanding loans. A bank's run occurred. Diamond and the Vic 1983. The economic of Islamic finance and market failure. Riba prohibited. Intuitive description. Interest or earning money from money is prohibited profit, which is made when money is converted into a capital through effort, is permitted. Some types of debt, however, are permitted if they are linked to a real-world transaction and not used for purely speculative purposes. Linked to market failure. The importance of the real return for the real effort in investment cannot to be safe is emphasized. While speculation is discouraged, investment cannot to be risky through linking returns to real entrepreneurial effort. This could have productive efficiency, spillover benefit, positive externalities for the economy.
Assalamualaikum everyone, I am Iqmal Farhil. So for my part, I will briefly discuss the alternative to stop the recession in business cycles. So it can be witnessed from the mind map. Most of the researchers, they will mention that Islamic term is the primary aspect to be looked into. These are, for example, implementing the interest-free banking to refer to Sharia compliance and to always excuse the three main prohibitions for trading, which are riba, gara, and maisir. Other than that, as a Muslim, it is essential to have many trades because it will reflect in your business. Effective management also the crucial aspect that businesses should apply, especially to have the Sharia management system.
As a conclusion part, every country has its ups and downs. Unfortunately, countries having to deal with the financial problems, which tend to cause a tremendous effect on the nation as a whole. Financial crisis plays a huge role in countries going into a recession and being unable to meet the demand for money. Furthermore, developing countries are more than likely to face financial crisis due to not making trade, which depend on the amount of income that come in and outcome from the countries. The problem are not so much by the growth of credit, where what is relatively warm on the industrial markets, while being stronger in the emerging markets as the price of the assets related to the financial risk. Financial crises are not predictable because the risk grow as long as you do not hit hard. With the bitter and extreme experience that Malaysia faced before in the economic crisis, hoping for the future to a serious approach toward the undertaking the appropriate reform, it's not unlikely that Malaysia will emerge even stronger and more competitive in the long run.